He stood behind the podium like he'd done 100 times before, flag pin on his lapel, confident smile, talking about transparency, about accountability, about serving the people who elected him. Behind closed doors, federal investigators say a very different story was unfolding. This is the story of how the FBI and the IRS opened a joint investigation into a sitting member of Congress. This investigation that would eventually uncover a paper trail of shell companies, misused campaign funds, and millions of dollars that were never supposed to exist. The case you're about to hear is built from patterns seen across real federal public corruption investigations, the kind the FBI and IRS Criminal Investigation Unit handle together when the money trail crosses from campaign finance violations into outright fraud. We're calling the congressman at the center of this story, Daniel Ashford. What happened to him mirrors a pattern federal investigators have flagged again and again in recent years. Elected officials who treat campaign accounts, staff payrolls, and government contracts as personal piggy banks, and who assume wrongly that the paperwork will never catch up to them. Stick around until the end, because the way this case unraveled says a lot about how modern financial investigations actually work, and how even powerful people eventually leave a trail. Let's get into it. Daniel Ashford didn't start out looking like the kind of person federal agents would spend 2 years investigating. He was a small business owner before he ran for office, the kind of candidate local papers love to profile. He talked about cutting red tape, protecting jobs, bringing money back to the district. He won his first election by a comfortable margin, and by his third term, he'd built a reputation as a reliable fundraiser, someone national party committees liked to lean on when it came time to fill campaign war chests for tighter races elsewhere. That fundraising success, according to investigators who later reviewed the case, is exactly where the trouble started. Congressional campaigns run on donations, and donations come with rules. Money raised for a campaign is supposed to be used for campaign purposes: advertising, staff, travel, events. It is not supposed to end up covering a mortgage payment, a family vacation, or a car lease. Federal election law draws that line clearly, and the Federal Election Commission, the FBI, and IRS Criminal Investigation all have a role in enforcing it when the line gets crossed. Investigators say Ashford's campaign began drifting across that line gradually. A consulting fee here, a strategy retainer there. Nothing dramatic at first. The kind of vague expense categories that, on their own, might not raise many eyebrows in a single filing. But patterns matter in financial investigations, and over several election cycles, a pattern was exactly what began to form. According to the case investigators pieced together, the arrangement worked like this. Ashford's campaign committee began routing payments to a consulting firm that, on paper, provided strategic and communication services. The firm had a professional-sounding name, a simple website, and just enough activity to look legitimate to a casual observer. What investigators say they eventually discovered was that the firm was largely controlled by a close associate of the congressman, someone who had worked with him since his earliest campaign. Payments flowing into the firm from the campaign committee were, according to the case built against him, substantially larger than any comparable consulting work would reasonably cost. From there, a portion of that money allegedly flowed back out, not to legitimate campaign expenses, but into accounts connected to Ashford himself, sometimes through additional shell layers designed to obscure the final destination. It's a structure investigators say they've seen in similar public corruption cases nationwide, a legitimate-looking business entity sitting between the money's true source and its true destination, just complex enough to survive a casual glance at campaign finance disclosures, but not complex enough to survive a full federal financial forensic review. Alongside the consulting firm arrangement, investigators also flagged a second thread: government contracts. Federal agents say that companies with ties to Ashford's network appeared to receive favorable treatment in the awarding of certain federal grants and contracts tied to his congressional office, the kind of influence that, if proven, would cross from a campaign finance violation into a more serious bribery or honest services fraud allegation. None of this happened overnight. Investigators say schemes like this typically develop over years, not months, precisely because the people running them are counting on incremental changes going unnoticed. A 10% bump in a consulting invoice this cycle, a slightly larger contract award next cycle, small enough each time to avoid scrutiny, but large enough, compounded over years, to add up to millions. Financial crimes involving public officials rarely unravel because of a single dramatic discovery. They unravel because paper trails, no matter how carefully built, tend to leave inconsistencies. And inconsistencies are exactly what forensic accountants are trained to find. In this case, investigators say the first real crack appeared in routine campaign finance disclosures. Federal election filings are public record, and watchdog groups and journalists regularly comb through them looking for irregularities. According to people familiar with how the case developed, an unusual pattern in the consulting firm's invoices, vague service descriptions paired with suspiciously round dollar amounts, drew attention from an independent campaign finance watchdog organization, which flagged the filings to federal regulators. That referral is often where cases like this begin, not with a whistleblower walking into an FBI field office, but with a quiet regulatory flag that slowly grows into something bigger once agents start pulling threads. Once the FBI and IRS Criminal Investigation got involved, the process shifted from a paperwork review to a full financial forensic investigation. Agents subpoenaed bank records for the campaign committee, the consulting firm, and personal accounts connected to Ashford and his close associates. They cross-referenced consulting firm invoices against actual campaign events and deliverables, looking for gaps between what was billed and what was actually done. Investigators say those gaps were significant. Invoices described strategic planning sessions and media consulting work that, according to campaign staff interviews, either never happened or were vastly overbilled compared to market rates for similar services. At the same time, IRSCI agents began tracing the money that flowed out of the consulting firm, following it through personal accounts, a family trust, and eventually into real estate purchases that, on Ashford's official financial disclosure forms, were never fully explained. That's often the piece that turns a campaign finance inquiry into a criminal fraud investigation. Not just misused donor money, but unreported personal income and assets that don't match a public official's disclosed earnings. When federal investigators can show that money moved from donors through a shell entity into someone's personal net worth, without ever being reported as income, they're no longer just looking at a technical campaign finance violation. They're looking at potential wire fraud, tax fraud, and money laundering. By the time the case reached this stage, it was no longer a single agency matter. The FBI's Public Corruption Unit led the criminal investigation into potential bribery and honest services fraud, examining whether federal contracts and grants had been steered improperly in exchange for financial benefit. IRS Criminal Investigation worked in parallel, tracing the financial trail and examining whether personal income had gone unreported. Cases like this typically require a level of coordination that can take a long time to develop properly. Agents don't move on a sitting member of Congress based on a hunch or an incomplete paper trail. The political sensitivity alone means investigators are expected to build a case that can withstand intense public and legal scrutiny before any charges are filed. That meant months of subpoenaing financial records from multiple banks, interviewing current and former campaign staff, some cooperative, some far less so, and building out a financial model that could show, dollar for dollar, how money moved from campaign donors to the consulting firm to Ashford's personal accounts. Former staffers, according to people familiar with the investigation, played a key role. Several described being asked to sign off on invoices for work they knew hadn't been done, or being told not to ask too many questions about certain vendor relationships. Statements like these, corroborated by financial records, are often what turns a circumstantial case into one prosecutors are willing to bring before a grand jury. Investigators also reviewed communications, emails and messages between Ashford, his associates, and people connected to the consulting firm, looking for language that suggested clear intent rather than an innocent misunderstanding about invoicing practices. In public corruption cases, this is frequently the deciding factor. A messy expense report might be explained away as sloppy bookkeeping. A message instructing someone to make the invoice bigger this time is much harder to explain. When the investigation reached a point where prosecutors believed they had enough, it moved quickly. Search warrants were executed simultaneously at Ashford's congressional district office, his consulting associate's business address, and a private residence connected to the case. Financial records, computers, and phones were seized. Federal agents also served subpoenas on several banks and financial institutions to freeze certain accounts believed to hold funds tied to the alleged scheme. Raids involving a sitting member of Congress are handled with an extra layer of procedural care, given the constitutional protections that come with elected office. Agents typically coordinate closely with the Department of Justice's Public Integrity Section to ensure that evidence gathering doesn't run afoul of speech or debate protections that shield certain legislative activities from investigation. That's part of why cases like this can take so long to reach the search warrant stage. Investigators have to be precise about what they're pursuing. In the days following the search warrants, news of the investigation became public, and the political fallout began almost immediately. Calls for resignation came from across the political spectrum, though Ashford, through his attorney, maintained that the consulting arrangements were legitimate business relationships and that any irregularities were the result of bookkeeping errors rather than criminal intent. That's a common defense in cases like this, and it's part of why the paper trail matters so much. Prosecutors don't need a confession. They need financial records, invoices, bank transfers, and witness testimony that, taken together, show a clear and sustained pattern, not an isolated mistake. Federal charges in cases like this typically include wire fraud, honest services fraud, money laundering, and filing false financial disclosure statements, each carrying the potential for significant prison time, particularly when the alleged scheme spans multiple years and involves millions of dollars. Beyond the criminal exposure, cases like this carry consequences that extend well past a courtroom. A congressional ethics investigation typically runs alongside any criminal case, and depending on the outcome, can result in formal censure or even a vote on removal from office. Campaign donors who believed their contributions were funding legitimate political activity are often left angry and disillusioned, sometimes filing their own civil claims to recover funds, and the consulting associates and staff caught up in the scheme frequently face separate legal exposure of their own, especially if evidence shows they knowingly participated rather than simply following orders. There's also a quieter cost that doesn't always make headlines: the erosion of public trust. Investigators and ethics watchdogs who work on public corruption cases consistently point out that cases like this do lasting damage well beyond the individual involved, feeding a broader public cynicism about elected officials generally. Even though the vast majority of members of Congress never come close to this kind of conduct, that broader trust problem is part of why federal agencies treat public corruption cases as a priority even when they're difficult, expensive, and politically sensitive to pursue. A single successful prosecution sends a signal, investigators say, that no office is too powerful to escape scrutiny when the financial evidence is there. The bigger pattern: cases like this one aren't isolated. Public corruption investigations involving elected officials misusing campaign funds or steering government contracts for personal benefit have remained a consistent focus for the FBI's Public Corruption Unit and IRS Criminal Investigation for years. What tends to separate the cases that result in charges from the ones that never go anywhere is the same thing every time: the money trail. Investigators say that no matter how well-connected or well-protected a public official might be politically, financial records don't lie the way people can. Bank transfers, wire records, and tax filings create a factual record that, once subpoenaed and properly analyzed, is extremely difficult to explain away. Financial forensic experts who work these cases point to a few common warning signs that tend to show up across public corruption cases: vendor relationships with vague service descriptions and inflated pricing, campaign or government funds flowing to entities connected to the official's own associates or family members, personal asset growth that doesn't match disclosed income, and reluctance from staff to answer direct questions about certain financial arrangements. None of those signs alone proves wrongdoing, but when several of them show up together and persist over multiple years, they're exactly the kind of pattern that tends to draw federal attention, and eventually a knock on the door with a search warrant in hand. With the search warrants executed and the financial evidence secured, the case against Ashford moved into its next phase, the one most people never see play out. Federal prosecutors began presenting the evidence agents had spent nearly 2 years gathering to a grand jury. The consulting firm invoices, the wire transfer records, the real estate purchases that never matched Ashford's disclosed income, and the statements from former staffers who described being told not to ask questions about certain vendor relationships. A grand jury doesn't hear from the defense. It simply decides whether prosecutors have enough to bring formal charges. Given the scope of financial documentation involved, investigators close to the case say there was little doubt the jury would return an indictment. When it did, Ashford was formally charged with wire fraud, honest services fraud, money laundering, and filing false financial disclosure statements. Charges carrying the potential for decades in federal prison if he were convicted on all counts. At his arraignment, he pleaded not guilty, and his attorney repeated the same defense his team had offered from the beginning: that the consulting arrangements were legitimate, and any irregularities amounted to bookkeeping mistakes rather than deliberate fraud. That defense faced an uphill battle. Unlike cases built on eyewitness testimony or memory, this case rested almost entirely on financial paper trails, bank records, wire transfers, and invoices that either matched the story Ashford's team was telling or didn't. Prosecutors had spent months building a financial model showing, transfer by transfer, how donor money moved from the campaign committee, through the consulting firm, and into Ashford's personal accounts and property purchases. That kind of documentation leaves very little room to argue the money simply went somewhere else. Alongside the criminal case, federal prosecutors also filed for asset forfeiture, seeking to recover the real estate and funds investigators believed were directly tied to the scheme. A separate civil process that didn't require waiting for a criminal conviction to move forward. Within weeks, a lakefront property and several accounts connected to Ashford's associate were frozen pending the outcome of the case. At the same time, back in Washington, the House Ethics Committee opened its own investigation, running independently of the Department of Justice's criminal case. Ethics proceedings like this can end in a formal reprimand, censure, or in more serious cases, a recommendation for expulsion. Though expulsion itself requires a 2/3 vote and remains historically rare, Ashford didn't wait for that process to conclude. Facing mounting pressure from party leadership, plummeting approval numbers back in his district, and the reality of a criminal case that showed no signs of weakening, he announced his resignation from Congress less than 3 months after the indictment was unsealed. In his resignation statement, he continued to maintain his innocence, telling reporters he looked forward to clearing his name in court. His resignation didn't end the criminal case against him, but it did remove the added complexity of prosecuting a sitting member of Congress, a step federal prosecutors have seen play out in similar cases before. As the case moves toward trial, federal sentencing guidelines mean that if Ashford is ultimately convicted, the total financial loss, the multi-year span of the alleged scheme, and his position of public trust at the time would all weigh heavily in calculating a potential sentence. Factors that, in comparable public corruption cases, have pushed sentences well into double digits. For now, the case sits where financial corruption investigations often do at this stage. Charges filed, assets frozen, a resignation already in hand, and a trial date still to come, with prosecutors confident that the paper trail they spent 2 years building will speak for itself in front of a jury. Cases like this are a reminder that accountability doesn't disappear just because someone holds public office. It just takes longer to reach, and it takes patient, methodical investigators willing to follow a paper trail wherever it leads, no matter how powerful the name attached to it. If this case interested you, do me a favor and hit that like button. It genuinely helps this channel reach more people who care about how these investigations actually work. If you're new here, this channel breaks down real federal investigations, FBI and IRS cases, and the financial trails that bring them down. Hit subscribe, tap the notification bell so you don't miss the next case, and share this video with a friend who'd find it just as interesting as you did. Drop a comment below. I read everyone, and I want to know what case you want covered next. And like always, stay informed, stay curious, and I'll see you in the next one.